HFA loan to government-sponsored enterprises GCES date back much of the mortgage market in the US work with the state housing authorities HFA nationwide to offer these loans. Fannie and Freddie designed the loans and their terms, but neither they nor the state directly funds them or deals directly with the applicants. Instead, they work through a selection of approved private mortgage lenders. HFSA supports affordable housing initiatives, including helping homebuyers, homeowners, and renters, while their exact function and relationship to their state government. Various HFSA typically act as independent organizations overseen by a board of directors appointed by the directors appointed by the state governor. They might be referred to as the least housing authority, commissions, corporations, or department. Both GSC offer an HFA mortgage product with Fannie Mae. It's called the HFA Preferred Radius version in Rapid HF Advantage. Both are fixed rate mortgage with a minimum down payment of 3%. You can often finance that down payment with down payment assistance, which is provided through the HF. The assistance could be in the shape of a second mortgage with very generous terms. The generous term of forgivable loan that does not lead to be repaired in full or in part of it met certain conditions, or even an outright grant like HFA preferred grants depending on what that particular state authority offers. Often this assistance is only available if you are financing with an HFA loan. The HFA loan requirements to qualify for one of these mortgage you generally must a few basic HFA loan requirements. Down payment 3% for single family homes. Credit score at least 620. Debit to income ratio for 45 percentage. Requirements at least one borrower must use the home as a primary residence. Your local FH may have additional minimums you must meet. Often you need to be within certain income and purchase price limits that vary by country and household size, and of course you have to be buying the home within the state. Types of HFA loans. There are two types of HFA loans: Fannie Mae called HFA preferred and Freddie Mac known as HFA advantages. Some states offer both HFA preferred and HFA advantages loans. Some out of the go with the own types exclusively. Here's how to the types compare. HF mortgage and HF loan and FH loan might sound the same and have similar characteristics like a lockdown payment, but they are two separate types of mortgages. Let's dive into some of the similarities and difference. HF loans pros and cons. An HF mortgage has its pros and cons to consider before deciding if it is the best choice for you. Pros of HF loans: low down payment requirement and closing costs. With an HF loan, you can put down as little at 3% closing and upfront fees tend to be below financial resistance. Many HFA has offered assistance with closing costs or down payment. Larger mortgage insurance costs either insurance elimination. HFA loans charge less of mortgage insurance and eliminate insurance payment automatically upon reaching 80% loan to value, make it harder, if not impossible, to get out of mortgage insurance as long as the loan is active. Cons of